In this video, I want to show you guys how I start and how I plan my trading day each and every single morning. So what I like to do is I like to look top down. I like to look at least the previous 2 to 3 days worth of trading. I like to see what is the overall chart doing, right? I don't like to make things too difficult. I just like to let my eyes tell my brain realistically what is happening in on the chart, right? And if I just look at the previous 3 days worth of trading, we are making lower highs. Okay, so here's our high, here's a lower high, here's a lower high, here's a lower high, here's a lower high. So coming into today is the 17th of April. What I'm looking at here is we are making downwards price action. Okay, it's you don't have to be a rocket scientist, you don't have to be a genius to understand that this chart is grinding lower. Now, are you getting intraday pops? Maybe if you're looking at the 1 minute, 2 minute, 5 minute, 15-minute chart, even hourly chart at that matter. Are you going to get an hour's worth of time where the market might be on a dead cat bounce? Absolutely. But when the overall chart is going down, I want to lean my focus a little bit more into playing the rejections around key levels of interest. So on my chart, I've got some very specific key levels that I like to trade around. These levels will change on a bi-weekly basis depending on what the price action is doing. If we get outside of the range, if we are still in the range, it's going to all be dependent around what the range is, okay? So for this particular trading day, today, Thursday, April the 17th, my levels are still intact. These levels have been intact all week since Monday, and they're still intact on Thursday. With that being said, I've got some key areas of interest here where I'm finding rejection. I've got a key area level here, a key level here, a key level here that is acting as supply, acting as rejection, whatever you want to call it. So I know that in order for me to really want to flip bull, where I'm looking a little bit more for long positions, I'm going to need to get over 18,680 at a bare minimum, right? That would kind of dispel and kind of break this downtrend. And maybe I've got enough room to trade up to 18,847. Okay. If that happens, I would be 100%, inclined to want to take a long position. But until that happens, I'm going to be focused a little bit more on the rejections. I'm going to be focused a little bit more on the short-sided bias trades. Another way that I am going about setting up my day each and every single morning is I'm looking at the pre-market, I'm looking at overnight, I'm looking at what the price action did, okay? So what did we do in the overnight session? That's what I really want to know. And if I kind of zoom in here, right? If I zoom in here, we put in a high, we failed to get over 18,680, my key area, and we kind of sold off. We sold off into demand, failed to really hold that demand, put in a lower high. So coming into today's session, I already know that price action tried to test this upper supply and bulls could not get the job done. Okay. So for me, I look at what is the area of interest that we stayed below going into the session. Okay. Now that area today happened to be 18,500. I knew that if we stayed below, trading below 18,500, there's no real reason to go long whatsoever. All I realistically need to do is see if we're going to confirm a previous low and trade that into my next supply. It sounds easy, right? Now, again, is it that easy when you're trading in real time? No, absolutely not. If you look at this candle here, the candle that flushed out the pre-market swing low, it's a 127-point range candle and immediately snaps back 132 points, right? So this can kind of get people a little trapped depending on where you get into the trade. If you're down in the trade somewhere here, and the move snaps back on you 100 points, well, you're going to probably get stopped out of your position. But if you zoom out and you take the time to really focus on the price action, what is the price action telling you? Price action is telling you that the momentum is still to the downside, okay? We're still below 18,512. So even though you have a little bit of a pop here, maybe you're interested in kind of taking a short position off of that back test of that key zone. So if I was to go down to, let's say, a 5-minute time frame, and we kind of look at that back test, right? Let's kind of zoom in here just a little bit. If we look at that first initial decline, right? So we break down through the pre-market swing low, we back test that key level of 500, and then we sell off, right? So you could essentially have a low risk trade short setup right here, kind of utilizing this zone over 500 as a stop loss, and essentially telling yourself, as long as you're below a previous swing high, as long as you're below these pre-market highs, you want to stay short. This is minimal risk here for a potential big landslide trade that you can get involved in. All because the homework and the preparation from the top-down analysis that you did coming into the market was telling you that you wanted to stay more short-sided. Now, if this bounce was to continue, if this rally was to continue and kind of break back over 512, kind of pull back and consolidate and hold this 500 area and then break out, well, now the market is trying to tell you, okay, we back tested, we lost the key area of 500, we've reclaimed the area of 500, and we're pushing higher. At this point in time, then we can start targeting prices upwards of 18,655, which was my next key area here, going back to pre-market. So again, let's kind of zoom out here and let's look at a 30-minute time frame and just kind of zoom out a little bit here. Again, how I prepare for the market each and every single day is based on two things, or a few different things. It's based on the eye test of what is the market doing? Are we trending down? Or are we trending up? Just a very simple, quick question. From there, I look at how we're reacting around my key levels. How I'm coming up with these key levels are previous areas of rejection day by day on different time frames, ranging from 15 minutes to 30 minutes to an hour, to what happens when we find support. Where do we find support at? Where did the market have these intraday bounces? Where did price seem to hold? Where did the big moves come once we broke specific key areas? Okay, now these are areas that I offer in my Discord. I definitely put them out there for everyone. You can look at my charts. I post screen shares. If you guys want to join Evolution Traders, that link is down in the description box below. And then from there, coming into the market, it's all about patience. It's all about waiting for one of these key levels to get confirmed, backing it, making sure you understand where your risk is at, and letting the trade play out, right? All this stuff sounds easier than said than done, right? All this stuff is easier said than done. Of course, once you get into a trade, just like anyone, the emotions start to flare. You get into a trade that starts going against you. You start to feel the panic. You start to feel the fear. You start to feel the anxiety of, oh man, if this trade doesn't work out, I'm going to lose a bunch of money, right? But all in all, what it really comes down to, and what's really helped me over the years, is that if I don't trust my technical analysis, if I don't trust the homework that I've done, then what am I realistically doing on a day in and day out basis trying to trade the markets? Then at that point in time, all you're realistically trying to do is you're trying to manipulate the market to do what you want it to do based on your fear and your emotions, versus trading the plan that you've already done the homework on based on technical analysis. Now, I'm a very technical trader. I believe in technical analysis. I believe that levels tend to get tested and respected more times than they don't. And I believe that I'm not smarter than the market, okay? Because I'm an idiot, right? You're an idiot. We're all not the brightest people, even though at some point in times we think that we're the brightest people on earth. We're really not, right? Who's the smartest person, who's the smartest entity that's out there is the overall markets itself. The overall markets itself will tell you what to trust and what to believe. And a lot of times, you know, I read on social media, I watch videos, I read different comments and stuff like that. I talk and interact with a lot of traders. And some days you'll get the narrative that, you know, the market's very choppy. It's not doing anything. The market, you know, is stuck in a range. It's going back and forth. I can't trust the price action. In those type of days when you're channeling, when the market is range bound and it's trading inside of a zone. So let's say, for example, let's just use like the overnight session here. We had a clear support, a clear key level at 512. We had a clear level at 18,680. Okay. So if we were going up and then back down, like if the market looked like this, if we held this level and we went up, we came back down. 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 If the market is channeling like this, it's going to be extremely difficult for you to be on the right side of the trade for too long. If you notice that you're channel trading or the market is trading inside of a channel, you have to flip to a little bit more scalp biased or sit out of the market, right? Because if the market and the price action is channeling, well, I want to be a buyer down towards these ranges and I want to be a seller up at the top of the ranges, right? It sounds simple. But the problem that tends to happen is that you will spend about 80% of your time in the middle of the channel, okay? Which makes it extremely difficult because a lot of times when you're showing up to the market and you're looking at the charts and you're looking to take trades, you're getting setups that are in the middle of this channel, okay? So when you get trades that are in the middle of this channel, realistically, when you're going long, the market's pulling back to go short. When you're going short, the market's pulling back to go long. So what you need to do is either A, have enough patience when you are channeling, okay, to wait for it to get to the bottom of the range before you take your long, okay, to wait for the top of the range and to get rejected before you take that short, and to not fiddle in the middle. So when the price action is trading in the middle, and even if you're getting a beautiful setup based on your strategy, it's better to avoid those trades when you're channeling. Okay, have the patience and the discipline to wait for it to get to the bottom of the range, back test, hold, and then push up. Now your risk is more defined and your profits can be a lot larger. So again, I don't really like to channel trade. I like to wait until we get outside of the channel. So for example, we held the bottom of this range, came to the top of the range, held this range once more. I'm not really looking to kind of bounce this range here. What I'm really looking to do is see, do we break the bottom of this range? Do we back test this range? And can we confirm those lows? That's where I want to be involved in a trade down to the next area of demand. Okay, so this is what I like to do. Same thing would go for the top side. If we were channeling in here, I really don't want to take too many trades inside this channel. What I want to see have happen is I want to break the channel, pull back inside of it, and then confirm coming out, and I want to be involved in the breakout. Okay, because typically those are going to be your much bigger moves. They're going to be your much more stronger moves. If you guys are interested in learning how to trade this way, you're interested in kind of perfecting your craft a little bit, and maybe you want to get involved in trading with a community, I offer a mentorship. I offer a community. You guys can join Evolution Traders. You're going to get access to my course, which is going to outline all my different scalping strategies. You're going to get to trade with me live a few days a week where we can get on a voice call, and I'm going to be screen sharing where you guys can watch the screens. We can go over a bunch of different things. You can ask questions in real time. We could definitely trade together, and I'll make adjustments on the fly with you. So instead of you feeling like you're going at this alone, you can go at this with a group of other people, including myself, so we can attack these markets the best way possible. If you guys need a discount code with Apex, right now they're running an 80% off sale. You guys can use my discount code DAnthony. It's at the top. I believe it's at the top left if you guys want to get the spelling. I would highly appreciate it. It helps fund the channel. Definitely put a lot of time, energy into these videos. So any bit of support would help. Also, it's free. Shoot me a like. Shoot me a comment. Let me know how your guys' trading week went. Make sure to subscribe, guys. We're really, really close to 10,000 subscribers. I appreciate every single one of you guys. I'll see all of you guys on the next video.